I am filming this real early in the morning, the day after the rate cut, which in the news kind of fell behind based on the NDP's announcement. And this video is not going to be political. I'm going to do this a little bit different, actually. I'm just going to talk. I might not even edit this video, just share my thoughts on where things are at with the market, what's going on in Toronto, and maybe you guys can get involved in the comments as well. I was kind of laughing because the NDP and Liberal relationship, if you think the Taylor Swift and Travis Kelce relationship was fake, well, this one was a lot more fake. And we'll see what happens there. Probably nothing till February, so everyone gets their pension and they move on with their lives. But enough about that. So Bank of Canada cut for the third time in a row. So we're at 4.25. Now, if we do get another two cuts, another 25 point and another 25 point, that will put most variable rate mortgage holders back to like around a 5% rate. And although that still sounds relatively high compared to what we were used to, it's a lot lower than where they previously were. And maybe that's the silver lining here, that like, okay, it's going to be a slow progression here of rates coming down, but this is now the third signal in a row that maybe the worst is behind us. And I have a few ways of looking at this. Of course, you would think, okay, rates come down. That means maybe buyers would see this in the news headlines, and that would get them involved again in going out and seeing properties and making offers because they feel like, okay, like it's safe now. I can do it. The rates aren't going to get worse from here. And the fixed rate, which is, still what a lot of people are taking, but I've got a thought on that as well. Bond yields have been the lowest they've been since we kind of had that Silicon Valley Bank breakdown of 2023. So the fixed rates are trending downwards. The variable rates are on the way down. But the numbers came out recently for the Toronto Real Estate Board for August, and there's a few trends that have remained. Prices year over year are still basically the same. Month over month, you're dipping down for condos and average price. Freehold is holding pretty well, but that's just because there's so much less inventory for that type of property. And if we get those next two cuts, okay, and we end the year with the overnight rate being 3.75, let's say, maybe that's good news for people that have mortgage renewals coming up and people that are holding on to investment properties that have really been burning $1,500. I've heard stories of $2,000-$3,000 a month that people are paying just to hold their investment properties right now that certainly aren't going up in value. So when I look at this, what I would think is, in a weird way, every time Bank of Canada cuts, although you think that would mean more activity in the market, what I think it will actually mean is that it will signal to investors that are trying to sell their condos specifically in Toronto, because it's just it's so much of the inventory, that, hey, it's going to get better for you moving forward. So if you don't desperately have to sell, maybe now you're going to keep that property and you're going to take it off the market. So I actually think the rate cuts in a weird way are going to do the opposite of what people think. Of course, they will slowly encourage buyers to get back in, and maybe transaction volume will go up a little bit because it's been really low, basically since April 2022, as the rate apocalypse kind of started. And maybe now that the variable rate will get to around 5 if we have those next two cuts, well, the argument is, well, people were stress tested at 5.25. But Tom, everything else has gone up in their life. Trust me, I get it. It'll be interesting to see kind of how this plays out now. And if we look kind of into the future here, end of 2025, the projections are that overnight rate might get to 2.75. So what that means with the prime rate and where, kind of the dust settles here is, the variables might be 4, a little bit lower than that maybe by that time. Who knows for sure, right? Like anything could happen. There could obviously be another black swan event that changes this again. And that's where I was kind of having this thought, and kind of what prompted me to make this video is, a lot of our clients are having mortgage renewals coming up. I have people in my family that have mortgage renewals coming up, and the conversation now is like, okay, I don't want to take a 5-year fix because we all believe that the rates are going down. The 3-year fix seems to be still at this moment the most popular option. But like, is there a case? This is not financial advice. Is there a case to take the variable? But people were just burned so bad by that product that a lot of people will just take the 3-year fixed money because it's the safer option. And if I were to look into the future and grab my crystal ball and guess how this all kind of plays out, I think next 12 to 18 months, if you take a 3-year fixed, that monthly payment will be lower than if you took a variable, because there's still a pretty big gap there. I think after that, the variable might win again. I think there's a pretty strong argument for people that have that level of risk tolerance, because people are so scared of it based on what we just went through, that it may be something that you want to look at. And then the fixed rate renewal people coming up, this might be good for them. Some people had rates at 2%, and now they're going to renew, but maybe it's going to be in the 4.5s instead of the 5.5s or in the 6s, and who knows to what that really means for the market. And I still really firmly believe that, when the rates did what they did, we should have had a much bigger downturn in terms of prices from the peak of the market. Steve Karish on our podcast, his analogy is always like, okay, well, the market was foaming over. Like when you pour beer and the foam goes too high, you don't do a good pour. We cut off the top, and now it's kind of cooled down a little bit. The tools that the banks have utilized in terms of extending amortizations on mortgages, letting people pay $1 of principal payment and just paying interest every single month, have allowed people to hold on to their properties. And if they didn't allow that, you would have seen much worse prices in terms of what was going to drop, right? And then the final thing I want to discuss is like sales volume. There's going to be something that happens here in the next little bit. I don't know when. Like, there's this weird part of me that feels like maybe we're bottoming out here. But I understand fully. I'm a realtor that makes content online. So if I say that, then I'm just pumping the market. But I'm starting to notice it. But what I will say is, when the rates went down, because everyone has this different perspective, and we're going to have to find this middle ground here, is I talked to a lot of the people that are thinking about selling their properties or active listings that we have on the market. And sellers were like, okay, rates are going down. We know it's just the variable rate, but this will be a good thing. Maybe this will create more showings, maybe more offers, or maybe a better price. And then active buyers that we're currently working with, when the rates went down, they were thinking, okay, this means I get, a lower mortgage payment. And I did CTV News yesterday, actually, when they cut the rates. And that was one of the questions, like, well, rates are coming down, or are mortgages actually going to become cheaper? And in a downward trending market, yeah, they are, right? Like that's pretty clear. There will be a moment, I don't know when things will flip and people will be interested again, specifically in condos, because houses in Toronto are still moving really, really well. But I'd love to know from you, if you had to do a renewal on your mortgage right now, or you were getting a brand new mortgage, would you take the safe option? Would you take the 3-year fixed? Or would you ride the variable down? Because I think it's at least something worth considering. Thanks so much for watching this video. We do run one of the top teams here in the city of Toronto, helping people buy and sell over the last decade. If you want to book a call with me, you can do that in the first link in the description. Hope you like this style of unedited real estate talk. Maybe I'll do this a bit more often. My name is Tom Storey. Thank you so much for watching. And remember, home is where your story begins.